What is a blue chip stock? A blue chip stock is a share in a large, well-established and financially solid company that has been around for a long time. These companies are usually household names, often leaders in their industries, and known for being reliable. The term blue chip actually comes from poker, where blue chips have the highest value. In the stock market, it's a nickname for companies seen as safe and strong. But size alone doesn't make a blue chip. It's also about reputation, consistency, and a history of performing well even in tough times. Why does it matter? Blue chip stocks matter because they're often considered the backbone of many investment portfolios. People like them because they tend to be stable, pay regular dividends, and survive tough economic times better than smaller companies. For investors, they can provide a sense of security and steady growth rather than wild ups and downs. Many also feel more comfortable investing in businesses they recognize and trust. It makes the stock market feel less abstract. Here's a simple example. Think of companies like Apple, Coca-Cola, or Unilever. These businesses are well known, operate worldwide, and have a history of making profits year after year. In the UK, firms like HSBC and BP are often considered blue chip, while globally names like Nestlé in Switzerland or Toyota in Japan hold the same reputation. Imagine you own a commercial property location in town. One option is to rent space to a trendy new cafe. It could make you rich if it takes off, but it might close within a year. The other option is renting to a bank. Maybe not as exciting, but you can count on the rent arriving every month. Blue chip stocks are like the bank, steady and dependable. What else should you know? Blue chip stocks often pay dividends, regular cash payments to shareholders. This makes them popular with income-focused investors. They're also usually included in major stock indexes, like the S&P 500 in the US or the FTSE 100 in the UK. Some indexes, like the Dow Jones Industrial Average, are almost entirely made up of blue chip companies. One reason they're so trusted is their resilience. Many blue chips have survived recessions, financial crises, and even wars. That doesn't mean they can never fail, though. Big names like General Motors and Nokia once held blue chip status but stumbled badly. So while they're safer than most, they're not bulletproof. Another thing to note is that blue chip stocks may grow more slowly than smaller, riskier companies. For some investors, that trade-off is worth it. To sum it all up, blue chip stocks are shares in large, reliable, well-known companies. They stand out not just for their size, but for their long history of stability and resilience. They're valued for their dividends, steady growth, and reputation, making them a core choice for many investors. They're not risk-free, but they're often seen as the safer, steadier option in the stock market. Thanks for watching this video. Not sure where to go from here? You don't need another video, you need a plan. Grab the free 5-day series below and start investing with confidence. The link's right here on screen and in the description. Don't miss out.